The correction is here. Welcome back, everyone. Today we're going to be doing March's housing market update. Like I said, if you caught my videos, my shorts before, we're going to go through a quick fire round of all the markets that are happening here in Florida that I have readily available in Sunstats. So we're going to be digging into that data. Just so you know what to expect, I'm going to be doing no hard numbers today. We're just going to be looking strictly at graphs. So I'm going to be going through the median house price and then also going to the inventory. I'm going to break down the median price inventory, the lower price point, and then the highest price point so we can get a better idea of where the housing market is going. And also we'll be covering Lakeland because as you've heard, I'm sure on the news, that Lakeland is one of the most distressed markets for foreclosure filings. So we're going to be looking at what the current foreclosure data is there. Just be aware that since we are a non-judicial state, it does take 2 years for those foreclosure filings to roll through until those foreclosures can be taken into foreclosure. So we're going to get into the day. Like I said, we're going to go through that first, and then at the end of the video, if I got a lot of, and I hope I did because I'm pre-recording this, is cover the zip codes that you guys have put down in the comments, and we're going to go from there. So I appreciate you guys being here. If you could have been anywhere else in the world, but you're here with me right now. So we got a lot of data to get into, a lot of markets to cover. Let's get into it right now. We're going to be going through just at the end of the graph so you can guys see the numbers here. So as of right now, prices are down year over year 1.9%, and we're currently at $412,500, off from the peak of $429,900. Let's get into the type of inventory that we have going on right now. So right now, what I'm going to break down for you here is, right now, this is the amount of active inventory. But as you can see, that I covered is $412,500 for the median. So what I did was I put in the graph here basically where the median price is, and then the inventory below it and then above it, so that way we can get a better idea of how much active inventory is, and then that way you can also see the delta between what's actively on the market in those price ranges. So that way you got a better idea of where prices could go into the future as well, and me as well, so I can analyze that. Currently we have 114,454 units right now, currently as a state. And anything below the median, we're at just about 9,100. At the median, we are 29,747, and just below it, we're at 25,000 units. So you can see where that median is coming from. If you can see how, since there are going to be less transactions happening in these price points and lower than that, it will not kind of bring that down as much. But if transactions do happen more in this area, it'll bring it down. But let's keep going here. So for Orlando, Kissimmee, and Sanford, currently we are down only 0.5% year over year, and currently the price is at 441,870. And we move into the active inventory levels right now. We currently have just over 9,600 active units at the moment. At the median, we will see here we're at 3,586 units. Just below it, we're at 22,000 units. And then what will help bring that price down further even more, we're about 510 units. So we're back to a normal active inventory level. So the market is balancing out in the Central Florida area in Orlando. Cape Coral, median price right now, we are down 5.5% year on year, and current prices are at $395,000 from the peak of $470,000. So we have seen adjustments here, corrections in the market of Cape Coral, and you can see that we have downward trajectory here, but we did pop up just a little bit here. But we'll see where the market goes into the summer selling season, now that we are in March, and that's still year over year we are down 5.5%. And that's Cape Coral, Fort Myers area. Moving on, so this is the active inventory that is currently on the market. We're just under 10,000 units, and you can see here we're pretty much in line with each other here between the $300,000, $400,000 mark and the $400,000 to $500,000 mark, and the delta here we're just under $300,000. There's not as much active inventory, so while prices are coming down in Cape Coral, I can see them maybe, starting to balance out a little bit as, that delta between the lesser pricer homes is quite big. It's quite a gap with what is on the market. So I'm curious to see what will happen in the spring, in the summer selling season, because right now we're negative numbers in the spring, and that's not usually what happens. So if we continue that trend, we'll find out, over the course of the year, and possibly, into a bottom, because it looks like inventory is starting to roll over. Possibly, but we won't. No one knows what's going to happen in the future. So we just have to keep our eye on things. I'm more of a what's happened right now. Current data, hard numbers instead of speculative, because if we can see what could happen, right? We could speculate on what could happen with what's going on in the economy, but I would rather see what has happened, and then maybe what is going to happen in the future. We can determine economically what's happening in the market, or just in the economic environment, what where trajectory could go, and then obviously unemployment could go up. Wages could come down. There's a lot of variables that can happen. Moving on, we're going to be in the Crestview, Fort Walton Beach, Destin area. Currently, we are up 4.7% year over year, and that is down from the peak of $443,500. So, it looks like we're just kind of going sideways, slightly low, but, everything is still kind of floating sideways there. And we can see active inventory is increasing pretty sharply here, just over 3,500 units, following that median, following kind of close to each other again, around 600 units, and the delta there for what's under 300,000 is at 247. So even though active inventory is increasing, again, I said before, that doesn't mean that prices will fall. It's just depending on what amount of active inventory is on the market currently. So this can keep going up, but if this inventory level doesn't increase, so that way it can pull prices down, because the more prices will be transacting there, then it's going to be hard to drag that median down, because things are transacting here mostly at these price points. And let's just real quick check what's above the median, just out of curiosity. And that's floating along right with it. So, it's going to be hard to bring those prices down in that area when the active inventory isn't below let's say, what is that, 35-40% below the median. It's going to be harder for that to go down. Daytona and Daytona Beach, prices are still there. Looks like they're going sideways. They did go up a little bit month over month, but year over year we're down 2.8%, off from the peak of $365,950. And active inventory currently in there, and we're starting to see a little bit roll over again. They're just over 4,900 units. And following that median, you can see where the most active inventory is, and then the gap there. That's about another 40%, difference of. No, I'm sorry, that's actually more than that. It's about 125% ish, around there. Difference of how much active inventory is here compared to what is following the median. Let's see, Gainesville median price. We are down 2% year over year. And the peak price we had 380,000. So we're going a little bit down sideways here, but nothing too crazy in Gainesville. And then the active inventory, we are increasing a little bit. And like I said before, I do expect active inventory to actually continue increasing throughout the year. Every market's going to be a little bit different, especially considering what's going on, let's say with Airbnb. And we've seen, if you're following along through TikTok and other social media posts, and how Airbnb is right now having an issue. So markets where there is heavily invested with investors with short-term rentals, they could possibly turn those into mid-term rentals or long-term rentals. But if they want, pretty much to get out of that industry, then those houses will go on to the market, and we're starting to see an increase in that here in St. Pete, Clearwater, just in the Tampa Bay area, and also going down the Gulf Coast, because of what's going on with insurance, and they're just not cash flowing anymore. So those houses could end up going on the market in the future, and they are going on the market. Let's get into, I covered the inventory. As you can see again, the median is following pretty much with each other. And then, anything under 300,000, it's about a little bit less than half of what is on the market for the median price on active inventory. Homosassa Springs, median sales price, again, going a little bit sideways here. We are down 4.5% year over year, but we are going sideways so far for the year. And we'll see let's see what the peak was, $298,000 it looks like. $295,000, no, just $298,000 is the peak. So we're off the peak quite a bit. Let's see, just over $12,000 a little bit, $13,000. So again, prices are declining not over just year over year, but off of the peak. Let's get into inventory there. Inventory is rising quite a bit. We are back pretty much to 2012 inventory levels. And as we can see here, the medians are following each other. And the inventory under under 250,000 is 201. And so we are seeing, every market's different. It's really interesting to see, how inventory reacts with prices, because not every market is created equally. So we're going to see some differences on what is going on in that market. In Jacksonville, currently we're at $386,000 off the peak from 415,000. We are down 2.7% year over year, and also month over month. Let's check out where the inventory is there. So again, the median prices and what's above it is kind of just staying in trajectory together. And then anything under 300,000, 641 units. So a little, that's triple, they're 3x the amount of inventory than what is there. So what's following the median is going to stay. So again, we will see what happens in Jacksonville. Moving forward, Lakeland. So this is the one that's interesting, because if you've been reading a lot of the articles, they're saying that Lakeland is up 300% on foreclosure filings, and then short-term, like 30-day delinquencies, and those are increasing as well with the 60 and 90 days, but the 30 days increasing quite a bit. If you haven't followed Melody Wright or Danielle DiMartino Booth, especially Melody Wright, she's really heavy in the mortgage industry, and she keeps track of a lot of that. She's well informed and more informed than most people that I know, that I follow, I should say, what's going on in mortgage. If you don't know what's going on, follow her, because there's a lot of what she's claiming to be the subprime crisis of what happened in 08 now in FHA, because of a lot of just not honest applications of what's going on in FHA. She can break down more too. There's a lot of detail that she goes through. So if you haven't followed Melody Wright, I highly recommend you follow her, as well as Danielle DiMartino Booth. She ended up writing a paper and sending it to the Fed, because there's a lot of things going on with FHA that isn't being discussed, and I highly recommend you guys follow them so you can see what's going on. I'd rather you hear from them directly, because there's a lot of detail that's above my head that I can remember, and I want to make sure you guys are getting the full scope of the situation. So again, with Lakeland, we're seeing short declines here, and currently we are at $324,000 off from the peak of $349,000. And year over year, we're down 2.7%, and this Lakeland has definitely created a trend. We are now 7 months of 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months of a trend. So Lakeland is definitely seeing a correction in that market. And so what we're going to cover next is obviously the prices. So right now the active inventory. Right now we're at 5,003 units total on the market. If we're following the median again, 324,000. The inventory on the market is mostly on that market there on the median, and then what's just above it. There's not much, not as much. There's a big delta there of what the inventory is above that, and then below it, it's actually below that too. So I can probably see Lakeland, while price is still dropping year over year, it'll probably keep going sideways, kind of in this trajectory moving forward. So what I wanted to get into as well with Lakeland was the foreclosure inventory. So I expanded that out for you guys. If you can see, all the sales types in traditional is here, the most above it. We're in the thousands of transactions happening in the Lakeland market, and currently there's only 21 units currently on foreclosures. We'll see where that where that goes into the future, like I said, is a non-judicial state, so it's going to take some time for those foreclosures, those filings to start getting into the system, and how they go into the system, as far as the amount that goes per month onto the market. Is going to be interesting to see moving into the future. But I wanted to just kind of expand on that because they can say 300%, above, foreclosures are on the market 300%, year over year, month over month. But we need to, take what into consideration, that baseline of what they're talking about. So if you have, for example, 10 houses on the market and all of a sudden there's a 300% increase of foreclosures, that sounds scary, but in reality, it's not as scary as it really is in the situation. So let's keep moving forward. Miami, Fort Lauderdale, West Palm Beach, still a strong market over there. They're off of the peak of $650,000 to $640,000, but they are still up year over year, 1.6%. So, that side is staying strong, and I'm pretty sure they'll be resilient moving forward. Even if you see the active inventory there, it's still less, it's almost a pre-pandemic inventory, but we're moving up. And like I said, I'm pretty sure by summertime, if the new listings doesn't match the solds, because the solds have been less than what has actually sold, and this inventory is going to continue to increase. And if you see here the median prices, what they're falling, from 600,000 to just under $1 million, that's going to be most inventory, and then just under that median, we're at 3,900 units, and then the 300,000 to 400,000, there's quite a bit of a gap there, that delta between what is currently the median prices where most of the transactions are happening versus what would actually help pull that median down. So Naples, that one is becoming a buyer's market very quickly. If you see here, we are down 4.2% year over year, and month on month, we have gone down $125,000. So there's a big decrease there month over month, and you can see the lower price points here. There's looks like they're starting to kind of make a bottom, but we'll see where this goes into the summertime. If it keeps decreasing, then we'll have kind of that rolling over starting to happen in Naples as the year goes by. Because if you can see, prices typically go up during the spring selling season, and they'll start cooling down in the summertime. So we'll see where this market goes moving into the rest of the year. This one's going to be interesting to follow. And then here, you see the Naples active inventory. We are back to 2019 levels. And again, following that median, we'll go back to that median, 800,000. You see here the active inventory, and I put 1 million on here because I wanted to see how many units were on the market. And there's going to be a lot of price pressure here in the $1 million mark. So just above the median, 600 to just under 1 million. That's where the median inventory is. If this inventory keeps increasing, there's a possibility that price could go up over the summertime, as you see with anything below the median. But even then, because you still have $200,000 below what's actively the median price currently. So that could actually keep getting drawn down as this inventory, if it keeps increasing under the $800,000 mark. Those transactions happening under that price point can still drop that down, even though there's not much inventory under $600,000. So Naples is going to be another one interesting to keep our eye on, and that also includes Marco Island. Northport, Sarasota, Bradenton, those prices are coming down as well. We're down 3% year over year. Month over month, we went up just about $1,300 or so, a little bit over $1,300 month over month, so nothing too crazy. And we are off the peak from 544,343. There's a good gap there. Prices have gone down, and again, we have set a trend in this market, and as well. I want to see real quick. Naples, they haven't really set a trend yet, but they are going down. Definitely, Northport, Sarasota area, they have created a trend. They are negative prices. And Northport, Sarasota, the active inventory there is still increasing, just over 7,600 units there. What's above that median, we're at 2,300 units. What's around the median is 1,300 units, and what's really below that median, 291. That's why I'm thinking that prices will probably come down. Ocala, they are going slightly up. Year over year they're flat. They haven't really created a trend, so it looks like they're just, small price growth, if nothing at all, year over year. But they haven't set, any negative trends yet, so they're pretty much a flat market. Let's see here. Active inventory, again, that is above this 4,000 units. That is back to March of 2011 inventory levels. Sorry, July 2011 inventory levels. And then following that median price, let's just double check it again, 290,000. So 290,000, this is the line we're looking for. So this is where the median's at. And again, whatever's under that could start pulling that price down. There's not very much under the median, and there's quite a bit of units above the median. So depending on where transactions transact for that month, or they close for that month, pull it up and down. But there's a good chance that it's going to probably stay around flat for the month. Palm Bay, Melbourne, we are down 4% year over year, and they haven't created a trend yet. They have gone up month over month a little bit, or 2%, and then down 1.1% or 4%. So they haven't created a trend yet, but we are seeing prices coming down from the peak from 384,000. So we're at $359,945. Inventory there, we can see here that we are back pretty much to 2012 inventory levels. What's above the median, 751 units. What's around the median, 1,158 units. And what's below the median, under $300,000, we're at 381. So I do think that prices will probably continue going down just a little bit here, but then possibly start settling and going flat moving forward. So we'll see what happens with that area. Panama City, we have an increase actually year over year from to 2.8%. So it's not really creating a trend. It's going up and down as well. But we are off the peak of 390,000 to 365,000. Active inventory there, that's still going up quite sharply too. And it looks like this line is kind of following this line here. So this above the median is 611 units, and then around the median is 517,000, and then below that median we're at 181 units. So it's a fraction of the inventory there. I can probably see this market maybe starting to flatline as well. Probably not going to see too many increases. You will see little sharp ups and downs, but as far as like going across, you'll start seeing probably the prices starting to flatten out a little bit. We just went over the inventory. Pensacola, Ferry Pass, and Brent, prices did go up there as well. So it looks like the northern part of Florida prices are kind of increasing. I'm almost guaranteeing that has something to do with insurance. So you don't know how insurance works. It also works how population density. So the more people in the city, the higher insurance costs are going to be. So I'm going to guess that people are moving North Florida, so that way the insurance, even though the hurricanes and the storms hit more often up there, because there's less people, there's less amount of dollars to make claims on. So I can probably see Northern Florida probably increasing in prices moving forward for a little bit, while Central and Southern Florida, they're going to probably decrease. They probably will. They're going to decrease moving forward. Like I said, maybe 1 to 3%. Nothing, worth a crash, scenario. But we are seeing correctiveness in the markets, so it's going to be interesting to see how separated the Southern, Central, and Northern Florida markets go moving forward. And we're up 5.9% year over year, and we're still on an uptrend as well. So let's get into the active inventory. Active inventory, we're back to 2015 levels, or 2013 levels. What was the median again? 338,000. So what's above it is not very, there's about 571 units. There's an 890 units where the median's at, and there's 424 units what's below the median. So I can see that probably prices will start to either again go sideways. I'm sorry, wrong market. Go sideways. I don't think this will keep going up much further. If it does, and then it'll probably start falling off later throughout the year because of seasonality. Moving forward, Port St. Lucie, we're at 415,000. We're down 2.3%. And again, we haven't really created a trend as we have some ups and downs in that market. Active inventory, we are back to 2012 levels now, so above pre-pandemic. And again, the median is where it's following. Let me just double check that again. 415. So yeah, so it's following the median. It's at the bottom end of this list. So I can see prices probably starting to, follow this moving forward in the year. Maybe negative 0.5%, around there, but I don't think we'll have much more in the 2% moving into the summer. Maybe in the fall, we'll get back into those, into the twos and above. Again, I'm not a fortune teller. This is just me looking at data, analyzing, and this is just real quick. Haven't really dug too deep into it. Now, Punta Gorda, that one has been interesting. We are off the peak from 412,000. Right now, we're at $558,972. So we have definitely seen a decrease from the peak. February, they got hit really hard, and they have created a trend here. If you see these negative numbers, they are definitely in a trend of negative price growth. Well, not in a price growth, but just negative prices overall. And I can see that continuing to be the case moving forward as well. There is quite a bit of inventory here. So when I first saw this, I was in shock. There's another realtor I follow. He's in the Southwest Florida market. And so I was really curious, and I was following. I was like, what's really going on in this market? Because obviously my market's every market's different. Tampa, Orlando, the markets usually that I cover. I was just really interested to see. So this is a crash. This is what a crash would look like in a scenario where even with the prices would equate to, let's say, again, the median. Let's go back to that median. I want to double check, 358,000. So if you can see that, most of the inventory, most of the price pressure is going to be here and here. But what I wanted to show, well, not here, there's not very many units, but it will help to pull it down. But what I want to do show you is the higher price points. So if you look at the higher price points, there is not that many units on the market either. So I can definitely see the prices pulling down because this is going to be causing the most price pressure here is the 459,000. This will help bring more inventory on this. No, I'm sorry. Where'd it go? I gotta switch back. Sorry. So this will bring price pressure because, as you can see here, the active inventory in this is well above what was at 2008. So with that much inventory piled up on top of what was back then, as you can see, we're back to 2008 levels. So of overall active inventory. So this market, I can definitely see not necessarily a crash this year, but a crash over the next 2 years. I can definitely see, and this will probably keep increasing. And as that keeps increasing, the more amount of price pressure is going to happen here, and it's going to drop the median price. So Punta Gorda, if you are a seller there, if you're living in that market, I highly recommend pricing your house accordingly, because you're not going to get any showings if you are above what the price ranges are. But again, everything's hyper local. Make sure you're getting a CMA when you are talking to your realtor about where to list your price. Sebastian Vero Beach. We are down to negative 15.2% year over year. That's a big hit right there. Currently, we are so I can see why the peak was actually 1 year ago, $460,000, and now we're at 390. So that is a big hit, and it has created not really a trend. It hasn't created a trend yet, so we'll see what happens moving forward. Let's take a look at their inventory levels. Inventory levels, again, following the median, so most of the transactions are going to happen here. Most price pressures are going to be here. There's not too much inventory below it to help pull prices down much further, but again, it just depends on what's transacting for that month in the price point. So we're seeing not as much inventory there. And again, as I said before, just because you have that much inventory or this little bit of inventory doesn't mean prices can't go up or down. It does help when you do have inventory increasing like this to help put pressures down on prices. But just because inventory is increasing, doesn't mean because you have to be above, what was in a normal balanced market, and we're still below March of 2020 currently in Vero Beach, but it does seem like there was. I'm curious where the dollar amount is. As this is going to be a quick inventory or a housing market, hot just cover data's, quick covering of the data points, not digging too deep into it. So we'll see where prices continue there. Sebring, we are down 3.8% off of the peak from $295,000 to $275,000. Looks like the biggest increase was 13.9%. That was in January. So I'm curious if people were trying to get ahead of the policy changes of what was going to happen in the market, and as psychology changed month over month, if that has anything to do. Because if you follow the VIX, I'm not sure if you guys are in the stock market or not, or just follow the news, but the VIX has been increasing through these months. So I wonder if that has anything to do with the psychology of buyers and buyers mostly when they're thinking about their offers. Inventory levels, we are back to 2013-14 levels there. Median was again 275,000. So this is pretty much where your median inventory is at, that orange line, and then what was just above it, that silver line, and then what's below it. So yeah, a little bit less, about half the inventory what's below the median price point there. So there could be a good amount of price pressures moving forward throughout the rest of this year. 2% to 4% I can see prices coming down over the course of the year for Sebring. Just looking at this inventory levels and where the dollar amount is on that. Tallahassee, prices are up 7.9% year over year. So we have one negative number there in December. Again, seasonality in December, holidays, not very many people want to transact, so prices can, that does put price pressures at that certain month. But we haven't created a trend for negative prices at all. We're still positive. So we will probably see positive price growth or flat, moving forward, going across year over, over the years, going across. But again, this is in northern Florida, so if people are migrating, from South Central Florida to northern Florida, that will have price pressures or price pressure to go up, not down. Migration is important. Inventory levels, again, 340,000 is the median. So the orange line is pretty much in line with what is just above it, and the delta between that is about half, a little bit less than half, about 70% half of what is below the median price points. And inventory, it's still on a downward trajectory. We're let's see, we are well below 2012, 2013. So where's an inventory shortage still in Tallahassee, in the capital. So I can see prices, probably, again, slightly increasing year over year. I'm wondering if it'll be in the 7s and 6s moving forward. Maybe, probably, with this much low inventory, I can see prices probably increasing right around anywhere between 6 to 8%. That seems about right. Tampa, St. Pete, Clearwater, my market here. Looks like we have 3 months of negative inventory. Well, you know what, I'm going to say we did create a trend. We are trending towards a negative prices, going from the past 1, 2, 3, 4, 5, 7, 8 months there. But mostly, going flat across the board. The peak was 425,000. Right now we're at $400,000 flat. So, $25,000 is quite a bit, but it's really not that much in my opinion. You'll spend that much in rent in a year, or a little bit less or more, depending on what your style of rental is, and your area. So that's where the sales prices at were markets here in the Tampa Bay area. So now let's look at inventory. We start increasing month over month. We're at 12,849 units. The median, again, this is where the most of the inventory is, so there will be the most price pressure here. What's just below it is just below the median levels there, about 1,000 units less. But then what's above that is 2,400. And let's just check real quick below the median. so we can check that delta. So there's 972, so a fraction of what is on the market currently at the median. So prices will come down. I think still in between 1 to 3% in the Tampa Bay area year over year moving forward, according to what is on the market. But again, what this will have the most price pressure to move prices down. And since we're at what we're at again, it's $400,000. Yeah, $400,000. So this right here, that's where it's at. So this I'm gonna just consider this technically the median price point line, where prices is gonna continue moving that down, as this there's a big gap between 400 and 600,000. So I can see Tampa coming down in prices still moving forward. The villages is really interesting. Their median sales price, they are down 3.8% year over year off of the peak. They were at 407,000 back in September 22. Now we're at 375. So again, another about $25,000 price difference there. And I wouldn't say they've set a trend yet. It's only been 2 months. I'd like to consider anything 4, 5, 6 months a trend when it comes to real estate. Typically 3 months is a trend, and other factors of the economic data, stock market data, stocks data, stuff like that. Earnings reports, stuff like that. When you're evaluating a company, so I can see we'll see what happens with this, but this is what's really interesting: the inventory levels in the villages. So even though we're well above 2,000 A levels, comparing that to Punta Gorda again. This is just incredible to me when I saw this, because even though there's still just single digit numbers of prices coming down, this inventory is just shooting up, and it's crazy. It's interesting to see. Let's go back real quick to the median price point, 375,000. So that's going to be this orange line here, and that's where most of the inventory is. So most of the price pressure will be here. What's just above that is they're about 60 units or so less of what is currently the median, and then what's below it is also increasing as well. So I can definitely see some price pressure still going to happen in the villages moving forward, and especially if this just keeps going up in the trajectory that it's in. So I hope you guys enjoyed all that data, and I hope some of that was clear to you. I'm trying to make this as fast as possible so we can cover the zip codes. So I apologize, and I'm just going off the top of my head, so I apologize if some of it was vague. If you do have any questions, comments, like I said, you can shoot me a quick text message if you want, just so we can get some more nuance to what is going on with inventory levels and what I think will go further into the market. So now that we covered all that, and we can go into what the zip code requirements, the zip code recommendations are that you guys posted in the comments. So let's get into the next part of the video here.